So my name is Sharat Sharma. I'm one of the co-founders of iSpirit Foundation. A very, very warm welcome to you to our 8th OCEN open house session. Now, there's a big gap between the 7th and the 8th, and we'll explain why that is the case. But today is the rollout of OCEN 4.0. So this is a very exciting moment. And in today's introductory open house session, we will give you an overview, a synopsis of many of the things that are there in 4.0. But of course, before we do that, although I'm sure most of you know what iSpirit is, but for a few that don't, iSpirit is a non-profit do and think tank, a technology think tank whose mission is to make India a product nation. And how do we do that? We do that by building these playgrounds, ecosystems to solve India's hard problems. And this playground is to do with lending, particularly MSME lending. And so we're going to talk a little bit about this. We are also distinguished because we partner with people. We partner with the market players. We partner with the policymakers, the VCs, and they're all important partners of iSpirit. And essentially what iSpirit does is take that problem that we are talking about and build a playground, over 20 years, right? Because nothing comes up right away, and it takes many years to do that. So in fact, this journey that we are talking about, which is the OCEN journey itself, goes back to many, many years ago. And we won't cover all of it because that's been mentioned in the earlier open house sessions. But we are probably, I would say, the whole idea of cash flow lending started for us in 2014. So we are almost 10 years into that journey. There are many, many volunteers. Everything that iSpirit does is no greed, no glory volunteers. These are nation builders who give up their time, their personal time. Some of them are doing it full time. They give up all their time to bring this to life. So this is, for us, nation building. Some of the volunteers are mentioned here. As we go forward, you'll get to meet more of them as we go forward. So since there has been an interim gap between our 7th video and this one, it'll be helpful for us to give you a synopsis of what the problem that we are solving, right? The problem that we are solving is to do with MSME credit, right? Frankly, if you look at it, credit is a problem. Both consumption credit, which is individual credit, retail credit, is a problem, and so is MSME credit. And both are very big problems. And frankly, much of what we're going to offer to you can also be used for consumption credit. But that's not our focus. That's not the problem we are out to solve. Why is it that we are not solving that problem? Because if you look at consumption credit, only 1 in 9 or 1 in 10 people who have a debit card are able to get a credit card, or even able to get a BNPL. You know why? Because the credit card companies say, hey, I'll give you a 1-year credit limit on the credit card, provided you have 3 years of stable salary income. And the number of people who have stable salary income are very few. So since they're very few, only those people are eligible to get a credit card. The people who don't have a stable salary income, like gig workers, are not able to get a credit card. Now, of course, they want a credit card. There's no doubt about this, right? Just the way a person who has a credit card can go and buy, let's say, a 8,000 rupee washing machine and pay for it over 2 years. They can do buy now, pay later. The gig worker wants the same benefit. But the problem is that since they don't have a stable income, the lenders are unwilling to give them a loan for 2 years, right? At a time when they don't have stable income. Of course, some lenders say, hey, I'll trust you and I'll give you a loan. And some of that has happened. And we know how the BNPL industry has panned out. We are not really focused on that, frankly, very much. What we are focused on is the MSME lending. Because in the MSME lending, there is a hack available to solve this problem. And the hack is that you can actually give short tenor loans to MSMEs. In a case of an MSME, you can give them a 2-month loan, right? In fact, many MSMEs are not eligible for 1-year working capital because the same rule applies. The lender goes to the MSME and say, hey, if your revenue growth has been steady over the last 3 years, I'll give you a 1-year working capital limit. But if you go to GST data and do the analysis, because we have the data, revenue data for people on GST, you can see only about 14.8% of the people actually have revenue growth over the past 2 years. So the remaining 85% of the people are not eligible for 1-year working capital limit. So what do we do? Now, for those people, it is possible to give them a 2-month loan. because that's good. If you manufacture a chair and sell it on government e-marketplace or any other marketplace, getting a 2-month loan is good, because with that 2-month loan, you can buy raw materials, you can manufacture the chair, sell the chair, and go back and do the cycle all over again. So short-term lending is an answer, is a hack to MSME lending, to business lending, while it's not a hack for consumption lending. Nobody wants a 2-month loan for buying a washing machine. That doesn't really solve the problem. So short-term lending is really the big solution that we are talking about as we go forward. But the problem that we have is that the market players, the lenders, believe that short tenor lending cannot be profitable. And here is their argument. Their argument is that if I've given a 1 lakh rupee loan for a year, let's say with a 5% spread, which is between your wholesale capital and your, whatever is the actual landed cost of the loan, I'll make roughly about 5,000 rupees. And this 5,000 rupees will pay for, my cost of acquisition, cost of processing the loan, dispersing the loan, collecting the loan, and all the regulatory compliances that I have. And I'll still have some money left over, maybe 1,000, 2,000 rupees left over, right? So that's their belief. And so they say, if I was to give the same loan for a quarter, right, then, and with the same 5% spread, then my margin is only 1,250 rupees, 1/4 of what I was going to make earlier. Then how will I make money? I'm not going to make money, because my costs that I described to you earlier maybe more than 1,250, right? And so therefore, this is not a practical proposition. Yes, it will be beneficial for those MSMEs who cannot be eligible for 1 year working capital limit, which is 85% of them. Yes, it will help them a lot. Yes, it will help our economy if we are able to give them lending. Yes, it will create jobs if our MSMEs get better lending. All that is true. But if I don't make money, how can I be in that business? This is the argument that is made. And this argument is not true anymore, right? And why is this not true? Because all of these things have changed. And how have they changed? We've created this concept of a borrower's agent, as you know, even from your earlier OCEN sessions, and that reduces the cost of acquisition. This means that if I already have a relationship with a borrower because I'm doing business with them, either on the government marketplace or on ONDC, or let's say on BlackBuck or Swiggy with restaurants, I already have a relationship. It's in my interest to help them get lending, and I can therefore offer them to lenders at a very low cost of acquisition, because we don't have to run around, and find them in the traditional way, which used to be very expensive. So by having this participant type called borrower agent, which is a type, borrower agents, loan agents, they're all a new entity that we are creating. You reduce the cost of acquisition by streamlining data through account aggregator, something that iSpirit has worked on for many, many years, and it's now thriving. You are actually reducing the cost of being able to get high provenance data about the borrower, which on the back of which you are able to build cash flow lending. Very soon, GST will also be available on the account aggregator. So you can now build a whole cash flow for the borrower, because you have the bank account statement that tells you what the incoming inflows have been, what their outstanding invoices are, and you can actually build a cash flow statement for the borrower, without actually getting it from the borrower. And that's actually high provenance, highly reliable, on the back of which you can think of giving cash flow loans. Digitization, which is what OCEN is about, bringing many participants together, reduces the cost of processing and disbursement. And then we've created this notion of a T4 loan, which I'm going to describe in a minute, which actually reduces dramatically the cost of collections. So what is this T4 loan? T4 loan is when you are able to give a loan where there is both collections control, the cash flow, the incoming cash flow is also controlled. Like if you do this on GEM, then the payment that is going to be made for that chair is going to come to an escrow account, and that escrow account will pay the lender first before it pays the borrower. So this really makes the life simple for the lender, right? So they don't have to run around for collections. Similarly, if you can make sure that the loan that you've given is end-use controlled, it is being used for whatever the purpose was, just the way it happens with housing loans. When we take a housing loan, they don't deposit the money in our bank account, because then we may be tempted to buy a car along the way before we give it to the builder. They give it directly to the builder. If you do that, then again, your odds of collection go up quite dramatically. So all the loan types that have been there so far have been actually mostly type 1. And what we are pushing the market to do is to slowly move from type 2 to type 3 to eventually to type 4. So the mechanisms that would allow you to do that are already built into the system, into the OCEN system as you go forward. And therefore, they reduce the cost of collections in a meaningful way. And finally, OCEN has built-in real-time reporting. So therefore, the cost of regulatory compliance also comes down very dramatically as you go forward. So these 5 things that you see actually make it possible now to make money in short tenor loans as you go forward. And this is why you're seeing people do that, right? You have Kenara doing that. YouGrow, of course, is a rocket ship, entirely focused on MSME financing, one-to-one finance. These are all people who are actually in the business of making these short tenor loans happen and are thriving as we speak today. And why are they so successful? Is because these pilots have happened and we've learned a lot from these pilots. The GEM pilot has been on for some time and lots of learning has happened. We have even in Karnataka kind of a Krishi card that has been built on OCEN, and that learning also has been very useful. So today, what are you hearing? You are hearing a new version of the public technology. OCEN has been around for some time. Version 3.x was there, and now we are giving you 4x. Sagar will later explain what the difference is between the two. So you're getting a new, better version of public technology. And the good news is that while this is in complete alignment with the digital lending guidelines, there is reason to believe that better things are on their way. And we will have better public policy for cash flow lending that is coming. You will ask, what is this better policy on cash flow lending that is coming? This better policy is to recognize the BA loan, have labeling requirements so that borrowers can pick BAs, which are borrower agents, much better. It is to make sure that the KYC for the MSME loan account is easier to do than KYC for a current account, right? Because all the money that is disbursed is disbursed to a KYC current account, right? So you can leverage that fact to actually do a lightweight KYC for a loan account. That is coming. Real-time regulation is coming. So the benefit of that for RBI is because they get real-time data, they can be picky and choosy, and they can, in some sense, audit people only as needed, right? And they can over time move from this model of a fixed audit schedule to an audit schedule that is based on what makes sense, based on the real-time data that they are getting. So that's going to be beneficial for many, many lenders as they go forward. Then there is provision for specialized disbursement agents that is going to come, and better support for escrow-based collections. And finally, there is need for loan labeling. Why? Because as we go forward, in these borrower agents, they're going to sign up many lenders because it's in their interest to do that. And if they have many lenders, ultimately our belief is this will come down to an auction model. If it comes down to an auction model, I as an MSME are going to get many loan offers. Then I need common labeling requirements so that I can pick the better loan offer, and I'm not duped into taking a loan offer which looks good on the surface but may not be actually good in practice. So there are many, many improvements that are coming in addition to the tech that you are getting today. And taken together, what they do is to open up this market of 85% of the MSMEs that are not served by lenders today. And there have been various estimates made. The MSME committee headed by Mr. UK Sinha itself has estimated this to be $17 billion, 17 lakh crores, which is 17 trillion rupees. And so it's a very large segment. It's about twice the size of the retail market. And we believe that it will grow to the size of the retail market in about half the time in the next 3, 4, 5 years. And this is, if some of you have read this book, Red Ocean, Blue Ocean, will relate to this. Instead of being in the red ocean where there's maramari, everybody is fighting for business, it's better to go to the blue ocean, which is underserved. And this is where newer players are able to establish themselves as big players. This is exactly what happened with UPI. The traditional UPI vendors are not the big players. It is the new players who treated it as a blue ocean, moved early, they are the ones who have done well. And this is what you will see in every new area that comes. Now, the good news is that we are very, very happy to tell you that there is a fair amount of momentum there already. We have many, many people who have signed up now to be part of this wave one of OCEN 4.0. It includes many types of borrowers agents, right? And so some of them, for example, Spice Money caters to dairies. If you look at some of the lenders like Samunati, that caters to FPOs, farmer producer organizations. SIDBI, of course, has a lot of money on its balance sheet. So it's great to have them here as a lender. UGRO is, as an NBFC, already doing well. I won't cover all of them here, but FINAG, for example, is helping those MSMEs who are not taking a loan, because they've sold something. They're taking a loan because they're buying something. They are dealers of a distributor. They're distributors of a principal, right? So FINAG is doing, excellent work in that area. Indify is doing thoughtful work in this area. So we are very happy to have this set of wave one lenders and loan agents. And what we don't show here, but will be visible to you on the website, is also the tech service providers, the TSPs that have come on board, who will help you implement this as we go forward. Now, what does wave one mean? Wave one means is that iSpirit is committed to help all the wave one players, whether they are loan agents or lenders or TSPs. We are committed to help you become successful. We want you to create winning implementations. And why are we willing to do that? Is because winning implementations is what the ecosystem needs. And so even though we are volunteers, we put our shoulder to the wheel and give you high quality support and collaborative support so that you can go on to be successful. Now, many of you will be wondering, what does it take for me to be wave one? It's not very difficult. We want skin in the game. We want real commitment. And if you want to be in the wave one, then fill out the form. This is the form link that you see here. It will also be there on the open.dev site in the contact section. Fill out a form. You can do two things in that form. You can either say you want to be part of wave one and what kind of participant you want to be. And second is that you can also pose questions to us, because in the upcoming sessions, as I said, this is only an overview. In the upcoming sessions, we are going to do deep dives. We are going to do deep dives on the API, which is going to happen in the next session, which is next Wednesday. And then we are going to do deep dives. If you're a loan agent, we're going to do a deep dive from your perspective. If you're a TSP, a deep dive from your perspective. And then if you're a lender, a deep dive from your perspective. And we'll do any number of more open house sessions if there are questions that are unanswered, so that every piece of information is out there in a democratized form, so that you don't have to run around looking for it. So with that, I'm going to stop here and hand it over to my fellow volunteer who has been instrumental in bringing all this to life. Sagar, over to you.
Whatever Sharad mentioned, we'll look at how that's going to be possible. I'm going to show, briefly describe and give a glimpse of how all this is going to be possible. There are 4 key components to this. The actors, we have created very specialized roles on the network. In the GEM SAHAY, we had lenders and we had the SAHAY application, which acted as a derived data partner, which is a bridge between the GEM portal and the application. The collection partner, which embedded the collection mechanism. We've introduced them as specialized roles. So there is more possibilities of different kinds of collection mechanisms happening, different data sources that can be linked, more than one that can be linked on the network. Account aggregator was added with GST SAHAY. GST data, bank account data, and any other ancillary data which is available via financial information providers is available. We are adding in KYC partner as a role. The KYC partner could be a tech player or could be a business correspondent who could do KYC in person on behalf. This KYC partner is predominantly made available by the loan agent, not by the lender. The lender could choose the KYC partner to complete the KYC process or could complete the process with their existing mean. There is no compulsion on the lender to use the KYC partner on the network, but in some cases, on a demographic environment, the KYC partner would make sense if there is an assisted journey required. A disbursement partner brings about the purpose control. They would probably bring about a catalog from the distributors in the purchase side of schemes, help them list on the application where the loan is originating, and payments going to the distributor directly instead of the borrower. Credit guarantees. So we have a pre-flight check on application that could be done on the OCEN protocol with CGT MSE. The applications could be checked before by the loan agent before it goes to the lenders. And these applications will have a CGT MSE eligible flag on it, where lenders can better underwrite if they are available on the CGT MSE side. These complete the full set of actors that are going to be there on 4.0. They have been added over a period of time. Coming from the actors, each provide actions. Actions are APIs. So from the 3.04 spec to the 4.0 spec, we've added portal-based registration for product and participants. Every participant will have to be onboarded onto the portal, verified by an SRO. Lenders would go ahead and define credit products against which there will be networks that are created by participants. These networks will be specialized business networks, either based on a geography, where they are serving a particular region for a dairy or a farm, or online marketplace like GEM or GST, which is targeting a specific set of users. These networks will have loan agents who will manage the network, add the partners, kind of give assistance to lender on functions of collections, disbursements, like I mentioned in the previous slide. All participants will integrate the 4.0 APIs. They are kind of broken down into participant and journey. My colleague Mustansir will walk through some of the APIs, and we'll have a session in detail walking through all the APIs going forward. The APIs are very largely simplified so that all the products that are created via the product registry can be served. We've separated out the offers from the product registry. The offers are kind of dynamic that will come from the lender based on the product. And the product is more of a workflow rule plus collection set, whether the product requires to be collection control, what kind of borrowers type is the product supporting. And some of the features that are there are digital-only disbursements via disbursement partners, credit guarantees, pre-flight check I mentioned in the previous slide, collections agents, and dispute resolution flows that are added as a part of the 4.0 spec. I'm just going to go and show a glimpse of how you add a product on the portal. So this is a glimpse of the product registry. I'm defining a product on behalf of a lender, which is for a private dairy VDA financing. Whether the product is an end-use control or collections controlled. What category of borrowers does it support? Support sole proprietorship in this case. Most of the businesses in the sole proprietary space. Whether it requires account aggregator flow, it requires monitoring consent. Benchmark data will be provided by the dairy on past supplies of the borrower, and the quality of milk metrics, the amount of milk supplied, and the money paid. Right. Once the product is defined, it is listed on the product registry. It could fuel a journey. I'm not going to go through the journey in detail, but I'm just going to quickly walk through a journey. The same VD already has a milk passbook kind of an app that is installed where they can check their payments and balances. It would have a loan tab. The loan tab, they could go ahead and check if there are any existing loans. They would go ahead and apply for a loan. Why would they want a loan? They would upload some ancillary files if required on the loan journey. With the consent, the dairies, which is a benchmark data provider or derived data provider in this case, going to provide the data directly to the lender. The account aggregator flow, I'm not going to go into details of the account aggregator flow. I'll just quickly walk through the account aggregator flow. At this point in time, the bank statements will be shared and the lender returns offers. There are various filters that a dairy provides to show which is a good application. Sharad mentioned about it in the previous things. So you could select the offer, select do my KYC. Now the lender would do it themselves, or they would do it via the KYC partner available. There could be a tech provider on the platform. set up a repayment account. In this case, we would use up a UPI mandate. And the money is in the bank account. So we looked at the actors, we looked at the journey, we looked at the APIs and the product, how it is created. We'll delve into all of these aspects in detail. With this, I'd hand over to Mustansir, where he'll provide you information on where to look for whatever documentation we've created, how to look for the APIs and everything. I'm going to stop my screen share here and I'll hand it over to Mustansir.
I'll be providing a quick walkthrough of the OCEN.dev website, which is a consolidation of all the resources that we've created for you to learn about and hopefully onboard in OCEN. So on the landing page, we reiterate on the problem statement OCEN is trying to solve and what gaps exist in the current market. So this is, as Shad mentioned, not the first iteration of OCEN. We've had previous open houses and we've collected all of them for you to learn about how OCEN has progressed over time. We've already signed up with quite a few Wave 1 partners, and hopefully we'll add to this list. Come to the documentation. For those of you who are already familiar with our previous iterations, we want to ensure that you understand what has changed with OCEN 4.0, and this is a consolidation of the changes. Participants have a well-defined role now in OCEN 4.0. And it's important for you to learn what those roles are, for you to understand what the loan journey looks like. So at a high level, the loan journey can be broken up into participant registry, product creation, and product group creation. Each of these steps are covered in great detail in their respective sections. On top of that, we also have an analytics service built on top of it. Since all of OCEN is API based, we need to build a comprehensive auth service whose overview we've covered here. The design principles, as well as the architecture overview and basic setup stuff. We've also tried to preempt some of the questions that will come our way with the FAQ section. And in case you find the terminology overwhelming, we also have a cheat sheet of all the terms that we use throughout the documentation. Finally, and most importantly, in the documentation, we have our API specs. So we have our API design principles and again, the security modules that our APIs support. As well as a high-level list of what the APIs look like. We also have a dedicated API tab for developers to onboard and integrate their APIs, which as promised, we'll cover in a separate section next week. Finally, we come to our blog section, which has been contributed to by our volunteers. We have a few salient points of OCEN, which are highlighted here, such as escrow-based collections, credit bureau pulls, and dispute resolution mechanics. Before I hand back to Sagar, I just wanted to highlight that we have a contact form integrated in the website right now. And if you want to sign up for OCEN as a Wave 1 partner and with any of these roles, please go ahead and sign up on the website using this form link.
You could also share queries via the same form that Mustansir flashed. With this, we come towards the end of the first open house. We'll cover each of the topics in great detail in subsequent weeks, starting from the APIs, which we are going to do next Wednesday. Thank you all for joining and listening. Again, it's been a collective effort by many volunteers, and I'd like to thank everyone previous and past who's worked on this. Some who are not here, some who've left things 2 years, 3 years before where we built on. So thank you to everyone. I'd hand it over to Sharad if he wants to have any closing remarks.
No, this is a very exciting moment. Our vision is that every MSME is eligible for a loan. It may be a small loan. It may be small ticket, small tenor, short tenor, but nevertheless, they should be able to get a loan and grow their business. And we are really passionate about this because if we don't address MSME lending in India, and I think this is now ready for prime time after years of piloting and learning from the market. If we don't address this in India, if all of us don't step up and solve this problem in a meaningful way, we will not be able to create jobs in India. As you know, all jobs in every country are created by small businesses. and our small businesses have to thrive for India to thrive. And so this is a big mission for us. And in this mission, you can play an important role in many ways. So come and join this revolution. Our fundamental thing is that India's hard problems are solved by private innovation using public infrastructure. So the public infrastructure is now in place. Time for private innovation to happen so that every MSME can be covered in the future. Thank you so much.